If you hold an ETF or you're considering buying an ETF, it's really important that you understand the tax implications of this. They are quite a complex investment when it comes to tax purposes. So today I'm going to go through what happens when you receive ETF income and what happens when you sell the ETF in the future. So what is an ETF? So an ETF is an exchange traded fund. And this fund holds various underlying investments. So you're buying units in an overall investment, but this investment holds various things below that. So they might hold shares, they might own property, they might own cryptocurrencies. And all of these different underlying assets make up the overall investment, and then you buy units within that. So this really complicates things from a tax point of view because you receive a distribution of this income that the fund receives. But this income can be made up of lots of different things depending on what type of investments the overall fund owns. And that's why the income side of things is very complex from a tax point of view. So you are going to receive distributions, and this is going to be your ongoing income. Now, these distributions can vary. Some funds might give them monthly, quarterly, annually, or some might not even give any distributions and they're trying to build up wealth within the fund. It just depends on how that particular fund works. So when we receive this income, this is a taxing point. Now, what we have to be careful on is what is the date. So these are a little bit different to dividends because instead of being when we receive it, it's going to be when that income relates to. So what you need to do is wait until you get the annual tax statement from your ETF that will show you what income needs to be included in that tax year. Now, when you get these, as you will see here on the screen, these are very complex. They are made up of a lot of different things because it depends what type of income the overall fund has earned. So we can see we can have things like interest, dividends, we can have franked distributions, we can have franking credits, we can have capital gains events. Maybe they've sold some assets within the fund and you're getting a distribution of those capital gains. We can then have foreign income as well and a few other labels that aren't as common but could happen. So you can see there's a lot of different things happening when you actually receive that final amount into your bank account. So when you do your tax return, you need this tax statement because it will give you the amounts and the labels on your tax return these need to go at. So be really careful when you're doing your tax return to make sure you've got these correct. Hopefully the ATL pre-fill data has come through. Typically that can take a little bit longer with ETFs. Typically we're talking more towards the end of July or sometime in August. Even if this has automatically pre-filled, you do want to check this off against the tax statement because sometimes these can be a little bit interesting on how they flow through. Well, you need to enter all these amounts in, and when you get that, you will get a final amount of income that you've received, and you'll pay tax on that income. Now, the good thing is that quite often these things might have some tax credits within it, such as some franking credits or some foreign tax income offsets that might help reduce the amount of tax that you need to pay on this income. At the end of the day, though, you need to remember if you're receiving ongoing income from your ETF, then you need to include this in your tax return and you need to wait for that tax statement. Now, something else you can do to better understand your taxes is to join my free email newsletter. Every single week, I drop free tax tips and business-related tips to you guys to help you better understand your taxes and hopefully maximize your overall tax position. Now let's get back into the video and talk about what happens when you sell your ETF. So when you first purchase your ETF, you're buying it at a unit price typically. So let's go with the example, we're going to buy 1,000 units in an ETF and they are currently worth $50. So this forms our cost base for the ETF. Now, as we hold this, we will receive our income distributions and we tax them as we talked about previously in the video. But what happens now when we go to sell it? So now we've gone to sell these units and now they are worth $60 per unit. So we've sold all 100 of our units and we've reached $6,000 for this. So we now have a capital gains event. So we have a $6,000 sale and we have a $5,000 cost base. And we're assuming that all of our fees have been included, those calculations. Now, because we've sold that for a gain, we have a $1,000 gain there because we take our sale price less our cost base. Now, you potentially will get a 50% discount if you have held this for over 12 months. So in this case, we're going to say, yes, we've held it for over 12 months. So we get a 50% discount. So we'll pay tax on $500 of this capital gain. Now, something else you have to be aware of with ETFs is you could have some cost-based adjustments. So you need to check these each time you get that annual statement. And you'll see down here, there could be some cost-based increases or decreases. So these would need to be factored in when you do your capital gains calculations. As you can see, ETFs are quite complex from a tax point of view. So what I would highly recommend is you use some kind of software to track this. My preference is ShareSite. I've been using it for my own tax return for many years now, and I have some ETFs and some other share investments, and it's just a huge time saver because I have everything linked. It automatically calculates all these income things, and then I can check them off when I'm putting them into my tax return, and then it's really handy for the capital gains events. You can join up through a link in the description of this video where you will get a bit of a discount on an annual membership. Now, something else you need to understand when it comes to investing in ETFs is what type of tax structure do you hold these in? In this upcoming video, I'll go through all the different tax structure options you have here in Australia, and I'll go through what I think is the best for holding your investments in. I thank you for watching this one, and I look forward to seeing you over there.